Is Wimi a buy or a sell? Let's get started with the model. This is a micro-cap company, 225 million market cap. They're trading at $2.29 a share, and they have 225 million shares outstanding. Wimi makes computer holographics mainly for advertising purposes. It was founded in 2015, headquartered in China. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They had negative free cash flow in 21 and 22. They finally had positive in 2023, positive 3 million. Then it grew over 700% to positive 25 million in the trailing 12 months. Net income is the profit or loss on the income statement. It's revenue minus expenses. And that's negative every single year. That does take longer to become positive because there's lots of non-cash items that bring down your net income. But we add those non-cash items back when we calculate free cash flow. A couple of really common ones are stock-based compensation and depreciation. Revenue is a sales for the company, and that doesn't look so great because it goes down from 130 million to 86 million. They report in Chinese yuan, but I converted to US dollars since we're looking at the ticker that trades in the US. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows, past year 4, that's 548 million. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $465 million. We divide that by 98 million shares. And we get a calculated stock price of $4.73. They're trading at $2.29, so they're trading at a 52% discount. It's a buy according to the model. Do you think it's a buy or sell? Let me know in the comments. There are 18 companies in the same industry as Wimi, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend $68 million in CapEx, which is more than the median average. They have a low debt to equity ratio, 0.2. That means for every dollar of equity, 20 cents of debt. They don't pay a dividend. Look at Town Square, a 10% dividend. And that's the smallest company on this list. They generate 25 million of free cash flow, which is worse than the median. Omnicom is number 1 at 1.5 billion. They rank 16th in market cap at 225 million. Still a really small company. Their price to book is 1.1. Price to book is stock price of a book value per share. That means investors are paying $1.10 for $1 book value. We can't look at their PE. They have negative earnings. A really attractive price to free cash flow, 9.2. That's stock price of a free cash flow per share. Town Square is number 1 at 4.5. Price to sales is higher than median average at 2.6. Investors are paying $2.60 for $1 revenue. They have 86 million of revenue, one of the smaller ones on this list. They're currently trading at $2.29, which is fairly close to their 52-week high, but it's like 250% above its 52-week low. So you could have got it for 61 cents at one point this year. If you put $10,000 into the company when they started trading in April 2020, after just a couple of months, your $10,000 would have been over $30,000, and you probably thought you'd be a millionaire. But it came all the way down to $2,400, so you'd be down 76% on your investment. To summarize, I have them trading at a 52% discount, ranking 3 out of 10. I'm not too sure about this stock. I generally don't invest in Chinese stocks, and I'm not a huge fan of their business model. So would I buy it short-term and long-term? 2 out of 10. They do have a good price to free cash flow, so ratio 6 out of 10. Financials 4 out of 10 because their revenue is going down. They do have positive free cash flow, so that's the only reason it's that high. If their free cash flow was still negative, they'd probably get a 1 or 2. Let's look at a company on Simply Wall Street. Its last price, $2.29, 126 million market cap, up 116% in the past week. Oh my God, up 183% in the past year. I think the market cap on Yahoo Finance was incorrect because this is 127 million, and I looked at E-Trade, same thing, 127 million. Here's the stock price since I started trading in April 2020. It looks like it was $5.28. One of my earlier videos was Wimi. I think it was in May or June of 2020. That was my first video to ever blow up because when Jack Ma used the Wimi product to give a speech, the stock price shot up, doubled or tripled overnight. You can see it peaked at 25 in mid-2020. It never even got that close again. It came down to about 5 or 6. It did run up to 11. That was in February 2021, but it's pretty much been downhill since then. It got to some real low points, well below $1. So if you're a bottom feeder, you could have made a lot of money on this stock. Let's read the news stories about this company. I usually go through the company's latest quarterly report, but when I go to their website and I click on the IR homepage, Investor Relations, and I've tried different browsers, so I can't look at anything from the company's website, so that's why I'm going to use simply Wall Street news articles. Here's an article today. Wimi Hologram develops a quantum technology-based random access memory architecture. There's a big trend on quantum computer stocks, and that's why this company stock has done well. They announced the development of QRAM. That stands for Quantum Technology Random Access Memory. This architecture successfully implements fundamental logical operations such as AND, OR, NOT, and NOR gates in quantum logic gates by combining key basic operations in quantum computing, such as a C0 gate, V gate, and V plus gate. I've definitely used the AND, OR, and NOT function in Excel. So QRAM is a memory architecture specifically designed for quantum computing environments, with the goal of enabling efficient reading and writing of information while maintaining the state of the quantum system. Optimistic investors push Wimi up 44%, but growth is still lacking. We saw earlier their revenue is going down. For the past 3 years, their revenue goes down each year. Wimi has done well the past month, posting an excellent gain of 44%. Looking back further, it's up 61% in last year. Most companies in its industry have a price of sales below 7. They're at 1.4. Right here, 1.4. The industry average is 0.7. Usually the lower the better for the price to sales ratio. The company grew revenue an impressive 19% last year, but that still was not enough, as the latest 3-year period has seen the company endure a nasty 45% drop in revenue. This article is from 10/1. Wimi stock up 31%. Wimi develops a blockchain-based integrated architecture for security maintenance in cloud computing. I wish we found an article that digged into their financials. It's just crazy how much the stock is up. In just the past week, 116%. Its industry is down 4%. In the past year, it's up 183%, while its industry is down 2%. The entire U.S. market is up 24% in the past year. So this is crushing the U.S. market. But if you go back further, in the past 3 years, this stock is down 25%. Its industry is down 28%, and the market's up 17%. But in the past year, 90 days, 30 days, and week, the stock is killing it. Actually, in the past 30 days, the U.S. market is down almost 1%. Wimi has 3 segments: AR advertising services, AR entertainment, and semiconductor-related products and services. They mainly offer holographic AR advertising services and holographic AR entertainment products. AR stands for augmented reality. Market cap $127 million, trailing 12-month revenue $84 million, earnings negative $56 million. Price to sales 2.7, and they have a negative PE, so we can't look at it. Is Wimi overvalued? Their valuation is $19.48, so they say the stock is 88% undervalued. They do have positive gross margin, positive 29%. Gross margin is gross profit over revenue. It's the percent of your revenue you convert to gross profit. 29% gross profit, 71% cost of revenue. Let's look at their DCF model. They use a discount rate of 7.3%, so that's pretty low, surprisingly low. They're projecting their revenue next year to be 316 million yuan. To convert to US dollars, divide by 7. So what is that, like 44, 45 million? And then in 2026, 413 million, up to 897 million in 2034. So 900 divided by 7, that's around 125 million US dollars. They calculate a terminal value after 10 years. They present value the terminal value. So the value of the company is 14 billion Chinese yuan. You divide that by 98 million shares, it's 142 per share. You divide that by 7, so roughly 20 US dollars per share, 1948. Here's their price to sales since they started trading. It was 4.6 in the very beginning, but that's come down a lot. Now it's 1.5. They were below 1. They were trading below revenue in 2022 at 0.7. Also trading below 1 in 2023. We can't really look at their PE because they usually have negative earnings. And their price to book, the highest was 3.3. Now it's down to 1.2. They were trading below book value in 2022 at 0.5. There are no analysts that price this stock. Here's a breakdown of their revenue. Of the $611 million, $608 million is AR services. So pretty much all their revenue is augmented reality services. They do have positive gross profit, $180 million, which means $430 million cost of revenue. Operating expenses, $591 million. Here's a breakdown of the operating expenses. G&A, $218 million. R&D, $154 million. $3 million sales and marketing. They don't spend much on marketing. That's surprising. And $216 million of other non-operating expenses. Here's their revenue since 2017. 192 million yuan. Its highest was 1.1 billion. That's around 150 million US dollars. Their revenue went down 50% from 2021 to 2023. They did have positive net income in 2017, 18, and 19, and the beginning of 2020, but then it was negative after that. 128 million of debt in 2017. It looks like their debt moves up and down quite a bit. The most debt is current at 183 million. That's about 24 million US dollars. But their equity is always a lot higher than their debt. Equity 870 million, debt 180 million. They have more cash than equity, about 1.2 billion of cash. So they could pay off all their debt if they needed to. 68% of the company is owned by the general public, 18% by private companies, 14% by insiders, and 1% by institutions. The founder of the company is the biggest shareholder at 13.5%. I'm not really sure who Wimi Jack is, but that entity owns 10%. I thought it was Jack Ma, but I can't confirm that. A lot of different companies own the stock, Morgan Stanley, JP Morgan at the end of the list. And their employee count has gone down, which is not a good sign. It was 122, peaked at 210, now it's 107. And the ticker trades on the NASDAQ and Deutsche Börse. So if you want to get a copy of my discounted cash flow model, click on the video in the top right corner. Talk to you soon.